what are the features to avoid when buying an investment property and why? Guys, my name's Julian. I'm the head of strategy here at Ripehouse Advisory, and today we're going to be going to some little minor details of things that we look to avoid when we're buying an investment property for our clients and why that actually is, the kind of ins and outs about that. So firstly, some of the main things we look to avoid are sentimental factors. And what I mean by sentimental factors, these are factors that put off potential buyers and potential renters in the future. So things like opposite a cemetery or behind a cemetery, next to an abattoir, too close to a childcare centre. So during the middle of the day, you hear the screaming of the kids in your backyard all day. They're sentimental factors, and the reason we look to avoid those factors is because what it does, it doesn't make your property, let's just say, any worse or better to live in. But what it does increase your days on market when you've got that property, because there are plenty of buyers who don't like the feel of living next door to a cemetery, or they might not like the noise of living next door to a childcare centre. So as your days on market increase, so does reduces the amount of inquiries you're getting on your property. So all of a sudden, if you've got the suburb average sitting at 50 days on market, but your property's been sitting there for 70, 80 days, all of a sudden you're getting a little knock on your door from your real estate agent saying, hey, we're not really getting the levels of inquiry here. We may need to look to reduce the property to kind of boost that inquiry, not only from the buying side, but also from the renting side. The other kind of big macro factors we look to avoid are properties that are in a flood, cyclone, or bushfire risk areas. Now, not only is it not an ideal thing to have an investment property where every kind of, whether it's summer, bushfire season, or the wet season where you're worrying about cyclones coming in, is your property going to be underwater or burnt to ashes? It also comes with extremely high insurance premiums. And what we know as investors, what do investors look for? They look for returns. Now, returns can be either in capital growth or they can either be in cash flow. If I'm having to allocate 5, 6, I've heard of some clients up in Cairns paying $7,000 to invest their 3-bedroom property up in the Cairns area per year, versus where I can go and get a property in a metro area, and let's just say Perth, and they're only paying $1,500 per year. Not only do I no longer have to worry about that threat every year, I've also got a property, even if the yield is slightly lower, the outgoing costs are significantly lower. That in turn means that area with the less insurance premiums will most likely have more investors interested in the area. And what do more investors lead to? That's more demand, less supply, and that leads to capital growth. Guys, these are just some of the key little features that we look for. There's dozens and dozens more of what we go through as a buyer's agency. If you would like to know a little bit more about what we do or have any other questions, feel free to leave a comment below. Alternatively, please make sure you click a link in the description box to book in a time to have a quick chat with myself regarding your property investment goals. And also make sure to follow me on LinkedIn. I'll be releasing a lot of content regarding property investment data on there. And make sure to subscribe and like to the channel, because we will be releasing some huge news in the coming months. Look forward to releasing that soon. That's it for today. Bye for now.